Welcome back folks to Investor Diaries. In this video, we'll speak about a company that engages in digital sports betting. But before that, wait a second, Nitish, is that really legal?
Maybe. It depends on where you live. So first off, playing daily fantasy sports online is legal in majority of the United States, roughly about 40 states of the US.
As the legalization of sports betting increases across the United States, there is one company which stands to benefit the maximum from it.
Yes, we're going to talk about DraftKings. We'll speak all about the company so you can decide whether you want to put your hard-earned money into this company or not. DraftKings is an American daily fantasy sports contest and sports betting operator. The company allows users to enter into daily and weekly fantasy sports contests and win money based on individual player performances in 5 major American sports, which are MLB, NHL, NFL, NBA, and PGA, along with UEFA Champions League, soccer, NASCAR auto racing, Canadian Football League, the XFL, mixed martial arts, and tennis.
But before we go anywhere, we should actually look at legalization of digital sports betting in United States. According to americangaming.org, sports betting activity is legal and live in 28 states plus DC. It's legal, not yet operational in 4 states. And in 2 other states, it's active or it's filed for legislation.
In recent years, the industry has experienced wider mainstream adoption and legislative approval. DraftKings, which is a top participant in this arena, is set to benefit as more and more states legalize online betting and casino games.
So DraftKings has been in the news all over. On the 4th of Feb, DraftKings announced that it's expanded its partnership with the NFL to Canada because previously it only existed in the United States.
On March 3rd, Dish Network and DraftKings announced a strategic agreement to provide DraftKings app on the Dish TV Hopper platform.
On 4th of March, DraftKings made another significant announcement that it is tying up with UFC to be its daily fantasy partner in the United States and Canada.
On 15th of April, DraftKings and National Football League said the sports entertainment and gaming company will become an NFL official sports betting partner.
On August 9th, DraftKings made yet another announcement that it was agreeing to buy Golden Nugget online in an all-stock transaction worth $1.56 billion.
On September 8th, it announced the launch of DraftKings Rocket, the 37th iGaming casino game developed internally. Rocket provides a prize pool of $1 million and the opportunity to compete against other players for other prizes as well.
On 13th of October, DraftKings made yet another announcement, its deal with the National Hockey League to become its official sports betting partner, daily fantasy sports partner, and iGaming partner in the United States.
Now, Appy, let's talk a little bit about the Ark Effect on the stock. The famed investor, Cathie Wood, is heavily invested in DraftKings, and she has used the recent dip as a buying opportunity. Her flagship ETF, ARKK, has bought approximately 11 million shares, which represent 2.5% of its portfolio. ARKW has bought about 3.5 million shares, which represents about 3.1% of the portfolio. ARKF has bought about 1.6 million shares, which represents about 2.2% of the portfolio.
And when you talk about Cathie Wood, I would say that Jim Cramer also has spoken about DraftKings so many times, Nitish. As recently as the 6th of October, he said that he thinks that DraftKings is incredibly well run and he's a buyer, not a seller of DraftKings.
Let's have a look on what the analysts are saying about the stock. On February 19th, Oppenheimer boosted its price target for this stock from $65 to $80 while maintaining an outperform rating.
On April 26th, Needham initiated coverage of DraftKings with an initial buy target of $81.
Now, on the other hand, on June 15th, short seller Hindenburg Research published a bearish report on the stock. The report claims DraftKings subsidiary has ties to organized crime.
There are about 27 analysts that are covering the stock right now. Out of them, there's 7 which is strong buy, 11 is a buy, 8 is a hold, and 1 is a sell. Overall, this results in a buy, which we think is a great opportunity for the investors to invest in DraftKings. DraftKings, it's a highly volatile stock. The 52-week high is $74.38 and it fell down to $34.9 during its 52-week low. At its current price, you are getting the stock at a significant discount.
Yeah, that's right, Appy. Like if you look at the historical stock prices, it is trading at a significant discount. So if as an investor you're looking for some growth at a discounted price, this is a good opportunity to buy in. Now let's look at DraftKings and Entain Deal into more detail. In the month of September, Entain received a stock and cash proposal from DraftKings valued at more than $22 billion. The terms represented a 43% premium over the stock price at that time.
However, the deal could not go through, and there are a few reasons why it was a failure. The potential deal was too complicated to begin with, in large part because of the involvement of BetMGM. Another issue was Entain's joint ownership of BetMGM, which is a US gambling venture with MGM Resorts International. MGM, in fact, had tried to buy Entain earlier this year for $11 billion, but walked away from the deal rather than increasing its bid.
When the DraftKings bid came along, Entain and MGM began new talks on technology licensing and governance for the venture, and MGM had said last month that after DraftKings' initial proposal, that any transaction that would cause Entain or its affiliates to own a competing business in the US would require the consent of MGM.
So why are we so bullish about DraftKings? First, the online gaming industry is forecasted to reach $112 billion in 2025. Now, this is up from $64 billion in 2020, and it represents a 75% increase. iGaming is tracking to be a $40 billion market in the United States at 100% legalization.
The Canadian online sports betting and iGaming total addressable market represents about $5 billion to $8 billion.
We've mentioned that this is a highly volatile stock, so a couple of risks associated with it. As COVID-19 restrictions continue to ease, people will move away from online to in-person based casinos because people want to have a social experience while playing or betting.
From privacy issues related to the consumer to technology regulations, DraftKings works in a space that is under constant legal scrutiny. And this is likely to increase as the dollars attached to this space continue to rise.
Let's look at the financials. For the third quarter ending 30th of September 2021, DraftKings announced a revenue of $213 million in this quarter over $133 million over the same period in 2020.
Monthly unique payers increased by 31% and average revenue per monthly unique payer grew by 38%. DraftKings also introduced 2022 revenue guidance of $1.7 billion and raised it to $1.9 billion, equating to about 43% year-on-year growth.
So the big question here is, should you actually buy DraftKings stocks or not? We feel that the company is in the right direction. It's acquiring customers at a rapid pace. The legalization is increasing in United States. This is a great time to buy this stock. It's trading at a discount, so you should go ahead and buy the stock.
That's right. Our recommendation is an absolute buy. But please keep in mind that this would be a volatile ride and you should be comfortable with taking certain risks associated with it. When the stock dips, please use that as a buying opportunity and buy some more, and do not panic. In the long run, we anticipate a massive upside to this DraftKings stock.
This is a wrap, folks. Thank you for tuning in. Do like, subscribe, and comment, and let us know in your feedback what you think of DraftKings. Thank you so much.
Thanks, everyone.